Yo, what's up, everybody? Welcome to the StackSats Show, your beginner-friendly guide to saving in Bitcoin. What's up, everybody? Put your questions in the chat if you have any questions. If it's your first time here and I haven't given you 1,000 Satoshis yet, subscribe, say hello in the chat, and I will send you 1,000 sats. What is a sat? It's a Satoshi. What is a Satoshi? It's a fraction of a Bitcoin. If you can accumulate 100 million Satoshis, you in essence have a Bitcoin. As if you were to accumulate 100 pennies, you basically have $1, okay? That's what we're doing. What up, Leonard? Round of applause from the live studio audience for Leonard. What up, Leonard? Chilling. Hope you're having a good day. Here we go. So, that's what we're doing today. And today's topic is how the dollar keeps you poor and what you can do about it. All right, we're gonna talk about that during the Why We Stack segment. McLovin in the house. Let's go, McLovin. Round of applause from the live studio audience. All right, here we go. Let's get into this, boys. Let's jump into the first segment of the show, which is set strength. All right, today we're gonna look at how many Bitcoin, how many Satoshis we can buy for a single dollar. Today, at the price of Bitcoin, it's pumping right now. We're up at 27,800, 27,999, 27,97. The price for one single dollar, you can get 3,600 Satoshis, 3,600 Satoshis for a single dollar. What a deal. What a deal. Here we go. Let's just say you're minding your own business, walking down the street, you see a penny, you look down, you see a penny, you pick it up, and all the day you'll have 36 Satoshis. 36 Satoshis for a single penny. What a deal. Take a screenshot of this. Take a screenshot of this, guys. When Bitcoin hits 1 million, you're gonna look back and say, damn, wish I had a time machine to go back there and buy all the sats I can when it was 36 Satoshis for a single penny, when it was 3,600 sats for a single dollar. And then you'll remember what I said. Stack hard, baby. Stack hard. Awesome. Hope it stays not busy for the next 20-30 minutes, McLovin. Let's do this. All right. So, there it is. That is the sat strength. And after that, we jump into the Why We Stack segment. All right. How the dollar keeps you poor and what you can do about it. If you've been here before, which most of you guys have, you know the answer. You know the answer. The dollar keeps you poor because it's always inflating supply. The way things are valuable is based on their scarcity. And the more dollars the government prints, the more dollars the government prints. Look at that. $100,000 in debt. $100,000 in debt. Again, $100,000 in debt. Some more. 100,000 more dollars. 100,000 more dollars again. That's how fast they're accumulating debt. And in order to pay for that debt, they need to print that money to pay back that debt. And when they do that, the amount of money you're making, the national average is 50,000 a year, right? It's taking somebody 2 years to earn 100,000, and these guys are spending it in a matter of seconds. 1,001, 1,002, 1,003, 1,004. In about 4 seconds, they spent $100,000. Okay, in about 2 seconds, they spent what the average person in America makes in 1 year. There's no way there's no way to beat that. You can't outrun that. This is the torrent of money that I've been telling you guys about. This is the waterfall, the Niagara Falls of money printing, and you're at the bottom trying to get up to the top with a little paddle boat. I'm not saying you guys don't make enough at your job, but no matter how much you make, you're not making 100,000. You're not making 50,000 every 2 seconds, right? You can't keep up with that. You can't keep up with that pace. Okay? The only way you can keep up with that pace is by taking the value that you're accumulating little by little at your job and taking it out of the fiat system, taking it out of the money matrix and putting it into the Bitcoin safe. Okay? When the value that you've earned is saved in dollars, it gets devalued at that rate. Look at that. Okay? That number going up means your dollar is being worth less and less. So they're losing value every second of the day. Look at that. That's impactful, right? So how do you keep your money how do you keep the value how do you keep the purchasing power of the dollars that you earn today? You take the dollars that you don't need immediately to spend and you put that in Bitcoin, and that takes that value outside of the grasp of this inflation that's happening today. That's happening all the time. That will continue to happen as long as the government exists. As long as the dollar exists, it will continue to inflate. And it doesn't matter who you vote for. It doesn't matter if you vote Republican. It doesn't matter if you vote Democrat. It doesn't matter who you like or who you don't like, or who said this or who said that, who grabbed whatever. It doesn't matter. The only thing that matters is that the money printers will continue to print, and your purchasing power will continue to get devalued, and therefore you will continue to have to work longer and longer in your life to attain half the things that people could attain 20 years ago with half of their life savings, right? So they're going to continue to try to extend you, to try to get you to work earlier, to try to get you to work later in life, so that you're always busy, so that you have no choice but to continue to work and work maybe 2 or 3 jobs just to make ends meet. And even then, your 2 or 3 jobs will never, ever be able to keep up with that right there, right? How can you keep up with that? You can't. So when you put the value you've saved and worked hard for into Bitcoin, this is now working for you, right? Because that value, it's outside of the matrix, it's outside of the dollar system. And in doing so, this is now working for you, right? As the dollar weakens because they keep printing money, the value of your Bitcoin does not weaken, right? You need more dollars to buy the same amount of Bitcoin, right? You need more weaker dollars. So the dollars that you buy Bitcoin with today are stronger than the dollars you'll buy Bitcoin with tomorrow and next month and next year. Next year, you're going to need more dollars to buy the same amount of Satoshis, right? And that's been the trend for a long time. So that's why we stack Bitcoin, and that's how you keep the dollar from stealing from you, and that is how the dollar keeps you poor. All right. So that's what we got for the Why We Stack segment. Hope you guys enjoyed it. Now we're gonna move on to the stack recap, because we don't just talk about stacking Bitcoin here. We don't just tell you why Bitcoin saves and fiat steals. We also buy Bitcoin every day, Monday through Friday, 12:15 Pacific Standard Time, 3:15 Eastern. And today, we're gonna where's ours? Here's our current position for the show. We are at 4.7 million sats. 4.7 million sats. And slow and steady climbing, okay? When it comes to the Satoshi game, when it comes to the Bitcoin game, guys, when we talk about Bitcoin, saving a Bitcoin, we're genuinely talking about saving a Bitcoin. We're not trying to buy Bitcoin, wait for it to go up, and then sell it for this. Why would you sell your Bitcoin for this? Bitcoin is scarce. It won't go beyond 21 million. They can't print more than that, right? 21 million Bitcoin. The dollar is going to continue to inflate. They're going to continue to print more of it, right? So if at any point you sold your Bitcoin for dollars, you would be, in essence, trading a better asset for a weaker asset that is going to continue to inflate. So the idea here is that you don't sell your Bitcoin, okay? Don't ever sell it. So only put what you don't have to touch for the next, 4 to 8 years. Right? Try to make it through 2 cycles. If you can make it through 2 cycles, stacking hard, you should be good to go. I'm surviving my first cycle, I think. I just went through my first. I got in at the end of the last bull run, and I've survived my first bear run. So I have another cycle or two to go through before I can see the rewards or see the true potential of the growth that you'll see when you span 2 cycles of Bitcoin. All right. So that said, today the price of Bitcoin is $27,814, and our average buy price is $27,985. So our average buy price is still above the Bitcoin price. So today, even though it says we're up 3%, we're gonna do a double stack. Say it with me, a double stack with cheese. We're gonna do a double stack with cheese today, baby. Let's do this. Okay, so we got 10, 4, 23. All right, here we go. I'm gonna switch over to that's a stack recap, and you know what we're doing now? And we're gonna do a double stack today. So today, we gotta go into it's time to stack some sats. All right, we're gonna stack sats on swan.com. If you want to buy sats like we buy sats here on the show, you can go to stacksatshow.com / what's it called? Swan. Roman, will you buy at the peak of the bull run? McLovin, I will. I will continue to DCA through the bull run. I will continue to DCA through the bull run. Because once the bull run happens, the only guarantee we have is that we have our halving, right? We'll talk about that during the Q&A section. That's a great question, dude. All right, so $20 here. I'm gonna change my screen real quick so I can do the preview. And then we're gonna talk about that. McLovin, we're gonna talk about that right now because that's a good question. Will I continue to DCA during the next bull run? Short answer, hell yes. I'll tell you why during the Q&A section. Okay, so show notes here. Today is episode 78. Wow. Episode 78. We're about to stack some sats. Let me adjust my screen here. All right, here we go. Cut the music. Drum roll, please. We're buying $20 worth of Bitcoin. It's going to cost us 20 cents. We're buying it at swanbitcoin.com. Affiliate link here is stacksatshow.com / swan. Get $10 worth of free Bitcoin. And there it is. Just like that, we've added to our stack. Okay, it's easy peasy. Easy peasy. So there. We're chilling. Stacking sats. Slapping babies. Kissing, what's it called? Kissing hands and slapping babies. Kissing hands and shaking babies. All right, here we go. We bought at 27 802, and we're buying $20 worth. $20 worth, and we paid 20 cents in fees, so we'd include the fees in our cost for a yield of 71,936. 71,936. What does that mean in sats? Move the decimal over 8 spaces to the right, or divided by 100 million, and you get the Satoshi value, which is 71,936 Satoshis. And we check our final amount up here. We're almost at 5 million Satoshis. What? 0.05 Bitcoin is around the corner. We're gonna keep stacking, and keep stacking. Okay, there's nothing that is as scarce that is as scarce as Bitcoin, that has all the features of Bitcoin, that would be worth trading your sats for. Okay, and as a matter of fact, this week will be the last week that I give away 1,000 sats to new subscribers, because I've been thinking to myself, every sat should count. Every stat should count. In the year 2134, when the last halving happens and the reward for mining a Bitcoin block is going to be 1 Satoshi. Can you imagine if the reward for mining a block now is 6.25 Bitcoin and the value of the 6.25 Bitcoin is over $100,000, right? In relative terms. If you take that same concept and you push it to the future in 2134, mining a block of Bitcoin, the reward will be 1 Satoshi. How much do you think a Satoshi is going to be worth? It's probably going to be worth a ton. So here I am giving away 1,000 sats a month. Raman, can I sell you my BTC at the peak price of cycle, and then I'll get back from you? Nice. You should. Because this is the thing. Here's why I would stack. All right, so that's it. That's what we got. Let's put it. We put it into the spreadsheet. It's in there. We're almost at 5 million sats. Round of applause for that. Gong, if you please. And now we're gonna jump into the Q&A section real quick. So yes. First of all, let's go over what McLovin was referring to as the bull and the bear market. Okay. So based on Bitcoin's natural 4-year cycle, which is when the rewards for the miners halve. When the reward for the miner halves, it decreases the available daily supply, and pretty much you have a built-in system that makes Bitcoin more scarce every 4 years. So every 4 years, Bitcoin gets more scarce. It's built into the code. You can't change it, and you can't modify it, and everybody understands that it's going to happen, and it's guaranteed to happen. Okay, so you're always going to have that 4-year cycle until the year 2134, when the halving has halved so much that that the final reward will be 1 Satoshi for mining the block. Okay, so when that happens, after the next 4 years from there, then you have zero Coinbase reward from the Bitcoin network, and the miners will only receive the fees that are charged, for people that process transactions on that block. Okay, but still, even then, Bitcoin will be so valuable that those fees that now seem insignificant are going to be a big deal in the future. Okay, 130 years from now, right? Okay, so probably something that we won't get to see, but it doesn't matter. We still know that we have basically almost a guarantee that the Bitcoin's going to get more scarce throughout time, right? So on top of that, how much Bitcoin you think is going to get lost between now and then from people that are just starting out in Bitcoin, don't understand what they're doing, and it's going to get lost, and then that's going to make everybody else's Bitcoin more valuable because it's going to be more scarce, right? Because even though if you mess up, you lose your coins, there's no tech support, guys. There's no taking it back. It's permanent as permanent gets. Okay, so that said, that is one of the potential things that could pump the price of Bitcoin, and we know that's going to happen. That's why we can see the 4-year cycles always going to happen. It's programmed in, right? On top of that, McLovin, we have other things that can pump the price at any time. It doesn't have to be during a bull market, right? It doesn't have to be during a bear market, but it could be, right? So for example, we have no guarantee of when those ETFs get approved, or if they ever get approved, or if they don't get approved at all, right? We can count on the 4-year cycle, which tells us it's going to pump and we're going to have a bull run, right? Well, during that bull run, let's say you sold because you're expecting the bear run to start, and that ETF gets approved, right? When everybody's expecting it to go into the bear market, right? The volume of money that's going to open up is so big that it's going to dwarf an average halving, right? So it could distort the whole halving pattern, because it'll be like a once in a lifetime type thing, right? To have that volume of money released into Bitcoin. And the way I say that volume of money released into Bitcoin is this. Think about how difficult it is for us to buy Bitcoin right now, right? We have to go and register for an exchange, hope that exchange works with our bank, and then get money from our bank to that exchange, and then buy it on the exchange, and then wait whatever grace period your bank gives you your exchange gives you on deposits. And then once you pass that grace period, it could be like 5 days, 3 days, 7 days, 10 days, depends on your exchange. And then you go when you buy your hardware device, you set it up, you write down your seed phrase in a safe place, and you have your phone or device connected to your computer or whatever it is that your hardware wallet lives. You do your first scary transaction from your exchange to your hardware wallet with a small amount of money to see if it works, and it works great. And then you do your full stack to your private to your self-custody wallet with private keys and all that stuff. And then you'll have some Bitcoin in a safe place, right? Well, how difficult is that? That's pretty difficult, right? You have to be committed to figuring it out and learning it, because there's a lot of things along the way that can distract you and detract you from doing it, right? Now, if a Bitcoin ETF gets approved, or when it does, it's gonna be way easier for you to invest money in Bitcoin. Not saying that it's gonna be the right way to do it, because you won't be self-custodying that Bitcoin, but you'll be giving your money to a company that you're comfortable with and that you probably already have an account with, right? And it's already working with your bank. You already know how to use it. You already have a login for it, right? Let's say you use like E-Trade or something like that, or like Robinhood, right? And then you go on Robinhood or whatever app you use for like trading your stocks. Like, oh yeah, I have a bunch of money in Tesla, right? But I hear Bitcoin is pretty good. Let's diversify my portfolio and go and get, and also half of my Tesla stock and buy Bitcoin ETF on the same app, right? And for most people, they're not going to care if they're self-custodying it or not, right? For true Bitcoiners, you are going to care where your coins live, because not your keys, not your crypto, right? But most people won't care, right? So what happens is those people will take that money out of other assets that they're comfortable working with, and those same people will just shift some of that money over with the click of a button, right? Not having to go set up a whole different exchange with everything we just discussed, right? So it becomes a lot easier for that liquidity to leave these other assets and come into Bitcoin, right? And once that money starts coming into Bitcoin, those ETFs have to, well, they don't have to, right? But they're gonna have to prove that they're holding that much Bitcoin in order for them to sell that Bitcoin ETF, right? Because it's like saying paper Bitcoin, right? So as all that money from that other people decide it's okay, it's a better investment to invest in Bitcoin because it's been up like 70% since the beginning of the year, right? It's beating everything else. Well, I'm gonna take some of my X stock or whatever stock. I didn't mean X as in Twitter, but it just happened to come out. Any stock that they might already have, and shift it over to Bitcoin, or sell something that or like bonds and stuff, and just shift it over to Bitcoin, because now it becomes so much easier for them to do it. Anyway, when that happens, you're gonna have a huge volume of money coming into to Bitcoin, and I think that's gonna trigger a bigger jump than the halving would normally, right? Now, here's where we come back all the way back to your original question. When do I sell or do I keep stacking at the top? I'm going to keep stacking at the top, because the top might be the bottom if the ETF gets approved, right? So you could another idea would be to save on the side in weakening dollars, right? See, that's the thing. There's no safe harbor for your wealth, right? Like if you're saving on the side because you think it's going to drop in the next couple of weeks, and it drops in the next couple of weeks, okay, fine. You bought a little bit more sats for that same amount of dollars, right? Let's say it's at 30,000 right now, right? And you're thinking, oh man, it might drop back to 25,000. Instead of DCAing, I'm going to save on the side. And when it drops down to 25, I'll go all in on 25, and I'll make a couple more sats, right? Well, while you're waiting for it to drop to 25, the ETF gets approved, and you'll never see 30 again. And you're on the side with a bunch of money that you could have had in the game, but now you missed the boat completely, and now you have to buy at the inflated price, or at a higher price, because you're buying along with the big institutions instead of front running the institutions, right? That's why I would stack. That's why I would continue to DCA even through the bull run. Okay, I know it's not financial advice, but that's the way I think of it, right? There's also other unknowables that would make the price move a lot. If a big country does what El Salvador does what El Salvador did and take Bitcoin as a national reserve currency, like a national reserve money, then we're in a different ballgame again, right? That's a whole different pump scenario, because then you start the race amongst governments. I mean, it's probably already happening behind the scenes. Governments are probably already accumulating behind the scenes, but as soon as any bigger government goes public that they're accumulating Bitcoin, they're gonna go against each other and try to accumulate as much as possible, right? And when that happens, they're gonna be willing to pay whatever you want for your Bitcoin. They're gonna be willing to pay it, right? Then it becomes a matter of like, it's your choice now. Do you want to sell your Bitcoin to like a government, or do you want to keep it forever because it's the most scarce thing available for us? Anyway, great question, McLovin. I appreciate that. It helped me get on the right path and talk about this thing and get my mind straight. Hope you guys enjoyed today's episode of the Stack Sats Show. Come back tomorrow, 12:15 Pacific Standard Time, 3:15 Eastern. Y'all have a great day. Happy Wednesday. You made it half the week. Hump day. I'll see you guys. I'll see you guys tomorrow. But until then, remember, smoking is bad for your health, and saving in dollars is bad for your wealth.